can be in the form of this 1 by 2, in the form of this 1 by 2, or 0.5. That will be 50, that will be 0.50. So that will be called fraction. So these are the ways of expressing a ratio: pure ratio, in times, in percentage, or in fraction. Next, then we can classify. We begin with, this is the way to express. Then we begin with the classification of the ratios, the counting ratios. The ratios can be classified in these four categories: liquidity ratios, solvency ratios, activity ratios, and profitability ratios. There are two types of liquidity ratios called current ratio and quick ratio. We'll discuss each in detail. Then there are solvency liquidity ratios that also called short-term ratios within 1 year, within a period of 12 months. This is called liquidity ratios, which measure the liquidity. Liquid means what is the current availability to us to pay the current assets, the current ability to pay our current liabilities from the assets that we have. That is called our liquidity. Solvency, long-term solvency, long-term payment ability to make the payment. That is called solvency. The four types of solvency ratios are debt equity ratio, total asset to debt ratio, propriety ratio, interest coverage ratio. Then there is activity. How active is one figure in relation to some other figure? How active are the services that are at disposal of the business? How active are those services being used to generate the turnover? These all ratios are expressed in the form of turnover on the sales, on the net revenue from operation. Four types of activity ratios: inventory turnover ratio, receivables turnover ratio, also called the stock turnover ratio, the BR ratio, payables turnover ratio, the creditors ratio. This is the debtors turnover, creditors turnover, and then the working capital turnover ratios. These are the turnover ratios. Activity ratios, also called the turnover ratios. Turnover means sales. I told you all these ratios are expressed in total sales. And the last category of ratio, the last classification of ratios is profitability ratios. Profitability means in relation to the profit that has been generated, revenue from operation. We have different types to express the profit: gross profit ratio, then there is operating ratio, then there is operating profit ratio, net profit ratio, and return on investment. These are the 5 types of profitability ratios. Are we clear? This is what we are going to proceed with. Starting now for the liquidity. The first type of ratio, we start with the liquidity ratios.